back to another video on the stock market today. Today we are looking at a concept that may be a little confusing to some people, or just something that they're unaware of currently, and that is the concept of a recession and why a recession doesn't have to be so bad for everybody or for anybody in general. So let's break this down. Let's look at recession. In economics, a recession is a business cycle contraction where there is a general decline in economic activity. So basically what that means is if you look at the quarter, you divide the economy into quarters, okay? And quarters are divided in 3 months. That's what a quarter is in the yearly cycle. So if the GDP, which is the gross domestic product, which I guess let's go ahead and define that real quick, gross domestic product, the total value of goods produced and services provided in a company or in a country during 1 year. So essentially it's just an overall well-being of a country. So what a recession is if the GDP of a country falls for 2 consecutive quarters. That is the classification of a recession. So 6 months of the GDP going downward is a recession. And this is a word we have heard a lot recently as you see top stories, 8 hours ago, hour ago, 43 minutes ago, all sorts of things, all sorts of stories about recessions. This is a concept. Doesn't have to be scary necessarily. There are good things, and of course there are obviously bad things about a recession, but it doesn't have to be bad for everybody. One person that you guys need to listen to at this point in time is Dave Ramsey. I'm sure a lot of you have heard of him. What he is a financial advisor of sorts. He has a radio show that I listen to occasionally, and I do watch a lot of his YouTube clips. And he does a great job of no BS. He's not going to beat around the bush. He's going to be very strict about things, and but he breaks it down in a sense where it is very easy for all people to understand. So you're going to get the gist. And he does have many books, such as Total Money Makeover, where he helps a lot of people get out of debt. And the biggest thing during a recession, why it doesn't have to be a bad thing, is because of the fact that if you're out of debt and because of the fact that you have a nest egg and you're sitting on wealth, this is going to allow you to, even if you lose income or products become more expensive or whatever it may be, you still have plenty of money to provide for your family and provide for yourself or whatever, and you still go about your life in a normal way. This is why a recession doesn't have to be a bad thing. If you are financially sound and financially sane, and you listen to some of these people who are actually giving good advice, you will be okay in a recession. Let's just take a look at it. I haven't even peeked at this yet, but let's see what this says. Unemployment rises 16. So this is just examples of recessions. A lot of times there's consumer purchases fall off, business may go bankrupt, young people can't get a good job after school, yada yada. Some people may lose their houses. Unemployment may rise as well. But again, one of the things that Dave Ramsey discusses is the fact that you should have 3 to 6 months of, he calls it an emergency fund. So what this means is whatever your expenses are on a monthly basis right now with your job, you should have 3 to 6 months of that built up so that you can live for 3 to 6 months, so you can maybe the economy turns around, or maybe you find another job, or whatever it may be. You should be able to live 3 to 6 months, and you just let that money sit there. You don't do anything with it. If inflation happens or whatever, you may invest, you may put a little bit more into that, but 3 to 6 months that you will be fine, and you won't have that time to find another job, and you will be able to, that's just one of the big moves of being financially smart. Perhaps the biggest positive of a recession, and this sounds so backwards, is the fact that stock prices will drop. This is a stock market channel, but I do try to help you guys with financial moves as well. Just basic finance and understanding of it. The stock market will drop in price. We're up to, let's see what the Dow is at today. Dow Jones, I can't spell. Dow Jones is at, I believe it dropped a little bit today, so it dropped about 300 points today. We're running on 26,000. You know, it was up to 27,000 a little while ago. I believe, let's see, 27, no, maybe it was longer ago than I thought. Okay, so back in July, it was up right around 27, almost the whole month. You know, that was a great month for stocks in general, and then it's kind of dropped a little bit, but not quite as low as in June. And I don't believe it's as low as December was. Hell, even January. December got pretty low at 21,000, so we're up 5,000 from then. And, you know, I guess people were probably freaking out, oh, there was a dip here. But, you know what you do during a dip is you buy stocks. You buy stocks. Let's take a look at Disney, for example. Again, my favorite stock. I say it in every video. Disney during the dip, at this point in time, $100. Now it's up to $136. $100. If you had bought Disney at this point, that is a terrific buy-in point. That's what a recession or an economic downturn or whatever can create for us, is a lot of great investing opportunities. Now, that doesn't always happen. There will be companies that are financially sound like Disney. I don't see them dropping back down to under 100, possibly ever. I do believe that's such a great company that they may not do that, but you know, you may look at a company, and again, AT&T is a company that's good as well, but this company may drop down. As you see in December, it was down to 27. I could see AT&T dropping back down to like maybe 25, might be a little low, but definitely to 30 if this potential recession does happen. So what a recession is going to do is it's going to create more buy-in points, better buy-in points for your money, more bang for your buck, if you will. I don't have any other particular stocks that I want to point out necessarily. If you are still scared of a recession and that scares you out of investing, don't let that happen. One way you can avoid potential financial mistakes are dividend stocks such as AT&T. We can look at this again. AT&T, well-known company, great. I'm up a good bit on them. They have a high dividend yield of 7.04. And what you can look for in particular is if you want a company that's going to consistently build its dividend, and no matter what happens, the dividend will be there. It'll be solid. Is you can look for what are called dividend aristocrats or dividend kings. Dividend aristocrats are companies that have increased their dividend for at least 25 years straight. And also dividend kings are companies that have increased their dividend for 30 years straight. So as you see, AT&T is actually a dividend aristocrat. So this goes through the 2009 financial crisis, all sorts of weird booms and busts, all sorts of things such as that. Those are 25. If you want to get it even deeper to dividend kings, I believe Coca-Cola might be a dividend king. And then you've got a couple other companies on here that are dividend kings. But this is a list of dividend aristocrats as of April 12th, 2019. Wikipedia does a good job of this, gives you the ticker symbol, the company, economic sector, which I like to look at for diversity reasons, and sub-industry if you want to get that deep into it. So you could look for these dividend paying stocks, these dividend yielding stocks that will provide this constant form of income even during a recession. You may not have a lot of growth during a recession. In fact, you may lose some money during a recession, but that's when you cost average downward for, like I've been trying to do with Tapestry, is they've dropped quite a bit. So I've been trying to buy it at lower points. I've done this with KeyBank as well. You buy at lower points. I was initially at like $17.50 on them, and I'm cost averaging down. I believe I'm down to right about $17. I'm down to $16.90 on them per share. So that's another great thing when the prices of the stocks drop. So recession doesn't have to be a bad thing. There are many great buying opportunities. You can still have your solid dividend stocks. You can still make money during a recession. Just be financially sound and have a good emergency fund and be smart with your investments. Don't look for the next big thing necessarily in a recession, unless it's just a crazy buying point. I don't have a great example to give right now, but maybe a developing industry may not be the greatest thing to get into during a recession, again, unless it's just some astronomical buying point that you need to make the move on and that you feel sound about. And another thing is just trust your gut. Whatever you believe is going to be a good investment, may turn out to be, it may not be, but it could turn out to be a great investment for your money. So that's going to be it for this one. Do not be afraid of the potential recession. It could be driven by all sorts of things, politics. The left wants Trump there to be a recession because then Trump may not get elected again. The right wants the economy to keep prospering, and they're going to tell you that the economy is wonderful so that Trump will get elected again. It doesn't matter what side you're on. Don't believe what you see on the news all the time, because a lot of it's not going to be true. Just be smart financially, and you should be okay. So leave a comment below, like and subscribe. I really appreciate it, and I will see you guys in the next one.